Seasonality is just a base case, so things can make it different. But this year we're going into the fourth quarter where sentiment, I think, is still really muted. If you look at things like AAII net bulls, it's barely positive. After a 30% rally in stocks, historically, you'd be solidly positive on a 20-week moving average of that number. Investors have really been skeptical this entire rally. That's why we call it the most hated V-shaped rally.
So if you think of the average American, they are getting punished in the economy, right? That K-shaped economy is really, really hurting a very large portion of it. And the beauty of Bitcoin is the very simple story. They are never going to stop printing money, so therefore Bitcoin will never stop going up. And if you simply think of Bitcoin as savings technology, all you have to do is go out, work hard at your job, make money, spend less than you make, and then put the extra savings into Bitcoin, and then allow Bitcoin to benefit from what we know is going to happen, which is they are never going to stop printing money. And I think that simplicity is actually very attractive to some cohort of investors. And now you see investors saying, wait a second here, this quote-unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin. And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
Today, we've got two big voices in the financial world, Tom Lee from Fundstrat and Anthony Pompliano, one of the loudest Bitcoin advocates out there. Tom Lee's talking about the Fed's 9-month pause and what that means for markets, plus why he thinks the next leg higher could already be underway. And then Pompliano breaks it down from a completely different angle, saying traditional finance is just too complicated and that Bitcoin's simplicity might be its biggest strength. Stick around, because we're reacting to both, starting with Tom Lee's take. Let's jump straight into Tom Lee's interview. He's explaining how the Fed's pause and manufacturing data could set the stage for a major Q4 rally. Before we dive deeper, make sure to hit that like button, subscribe to the channel, and turn on notifications so you don't miss our latest insights on markets, crypto, and digital assets. Drop your thoughts in the comments. Every like, share, and comment helps us grow and reach more people just like you. Now, let's get into it.
All right, so Tom, we said this a bunch of times. The markets seem to be shrugging off the shutdown, valuation concerns. What do you think is going on? Why do investors just continue to feel confidence?
Well, Frank, I think there's two underlying fundamental drivers for the economy. One is that we know there's a tremendous capex tailwind from AI. And the second is that the Fed's been on hold for 9 months, and it's kept the ISM below 50 for now 31 months, and the Fed's dovish. So that's the rest of the economy getting basically a lifeline. Those are going to be powerful tailwinds that even a government shutdown doesn't really change the story around. And now that we're in the seasonally strong fourth quarter, and valuations, I just don't think are that demanding because, NVIDIA is still at 26 times earnings. I mean, I think stocks still have a lot of upside into year end.
That's a bold call, even after everything the market's priced in. But Lee's got a point. AI capital expenditure and easier Fed policy are basically the two biggest tailwinds right now. And if the Fed really stays dovish, we could see liquidity push risk assets higher, including crypto.
All right, really quick, you're talking about ISM manufacturing, right? Still in contraction. You're saying the Federal Reserve rate cuts, if we stay on this path, that boosts the manufacturing sector? Is that the point you're trying to get to?
Yes, that's right.
Okay.
So the manufacturing sector has been cautious for 31 months, the longest stretch below 50 in history. And, that's business confidence. It's highly correlated with earnings growth. So I think once that moves above 50, that means we're back in expansion mode, and it's good for financials and small caps, and the tech trade continues. So I think it's a broad-based rally.
31 months of contraction, that's insane. If we break above 50, that's expansion territory again, and risk-on sentiment could explode. Historically, when manufacturing recovers, crypto usually follows equities.
I think a lot of people think it would be good for transports, energy prices. I think, as you mentioned, it would have impacts across the board if we see a boost in U.S. manufacturing. Okay, I want to get to your word of the day. It's dovish. Now, this is interesting. Your word's dovish, and you're dovish because the Fed didn't get the jobs report and might not get other reports. Why are you dovish, or you think the Fed's dovish, despite that critical information?
Well, the Fed has, I think, on balance, has to be more dovish than what they said they would be last month, because a government shutdown, as you know, disrupts economic activity. So even though they're not getting reports, there's also a standstill in GDP, and the government is a very large share of GDP. On top of that, it causes confidence to be weaker. A shutdown makes people nervous, and so the Fed will have to be even more dovish, and I think that's why stocks can rally even more than they have already.
Interesting angle. He's basically saying bad news is good news again. If the Fed turns more dovish because of weaker data, that's exactly the kind of environment where Bitcoin thrives.
All right, you're also looking at seasonality. You alluded to it earlier. According to your data, since 1950 in Q4, we see just about an average rise of about 5%. But when we're talking about seasonality, are you sure this isn't an outlier year? As we mentioned, a government shutdown, companies trying to deal with tariffs. We're seeing a trade war between the U.S. and China continue. It hasn't quite been resolved yet. I mean, aren't there some issues that could maybe shake the seasonality here?
Yes, that's right. I mean, seasonality is just a base case, so things can make it different. But this year, we're going into the fourth quarter where sentiment, I think, is still really muted. If you look at things like AAII net bulls, it's barely positive. After a 30% rally in stocks, historically, you'd be solidly positive on a 20-week moving average of that number. Investors have really been skeptical this entire rally. That's why we call it the most hated V-shaped rally.
The most hated rally, love that phrase. Sentiment's still negative, and that disbelief usually fuels the next leg up. That skepticism could be rocket fuel for both stocks and crypto heading into Q4.
All right, I want to get to your pick as well. Your pick for us today is financials. Now, is this on the idea that the Fed is dovish, rate cuts help, boost the yield curve, and that helps financials, or is there some other reason that you're saying that you would put money into financials right now ahead of earnings?
Well, I think financials have also fundamental tailwinds because we know the Fed is going to be dovish, which is helpful for economic activity. But on top of that, AI is a tool that the financials industry can leverage. It's going to help them root out fraud. It's going to help make their businesses more profitable. And it's something we've talked about at Fundstrat, which is the financials may end up getting technology valuations, especially given blockchain and moving from traditional financial rails onto blockchain and becoming more efficient.
Now this is where it gets exciting. Traditional finance finally recognizing the power of blockchain. Ethereum, Solana, even layer 2 seconds are becoming the new financial rails. This is the crossover moment we've been waiting for. All
right, you're also a big believer in Ether. So you're saying financials companies especially, you say, are building on Ether. Is that a tailwind somehow? The fact that they're building... Oh, sorry, did I cut you off?
Yes. Yeah, absolutely, Frank. Keep in mind, Exhibit A in all this is Tether. It's the largest stablecoin issuer in the world. It's valued at $500 billion, or about 25 times earnings. It makes it the second largest bank in the world behind JP Morgan. And it shows you that by building on the blockchain, a business can really reduce cost and be a lot less employee intensive. Tether only has 300 employees compared to JP Morgan, which has 313,000 employees. Okay. So Tether is valued at around 1.8 billion per employee, JP Morgan around 2.6. Okay. So you can see the leverage coming from Ethereum.
Crazy stat. Tether valued like one of the world's biggest banks, but with only 300 employees. That's what blockchain efficiency looks like. This is why legacy finance can't compete long term. That was Tom Lee with some strong macro takes talking about how AI and a dovish Fed could push markets even higher. But let's shift gears a bit. Now, Anthony Pompliano, or Pomp, takes a completely different approach. While Tom focuses on the macro and equities, Pomp dives into why Bitcoin's simplicity might be its biggest advantage over traditional finance. Let's check it out.
Bitcoin is trading near a record high. Joining us now, Anthony Pompliano, professional capital management founder and CEO. Anthony, it's good to see you. So I have to tell you, when we talk about crypto, Bitcoin, you want to keep up to date. It's a big, important market now with massive participation, but the story's always the same, isn't it? I mean, it's sort of like store of value. More people know about it and want to participate in it. Is there anything that's kind of moving the needle on a fundamental basis or a flow basis at this point?
Well, look, I actually think one of the problems with the traditional financial market is that people have to pay attention to it, right? If you think about what's going on in the stock market, I have to know what the company is, what products they're constantly coming out with, who are they selling them to, what's the latest earnings report, what's interest rates, all this information. It's very hard. And so if you think of the average American, they are getting punished in the economy, right? That K-shaped economy is really, really hurting a very large portion of it. And the beauty of Bitcoin is the very simple story. They are never going to stop printing money. So therefore, Bitcoin will never stop going up.
He's right, the traditional system is designed for insiders. Retail investors can't track every earnings report or Fed move. That's why Bitcoin's appeal as a set-it-and-forget-it savings technology hits so hard.
And if you simply think of Bitcoin as savings technology, all you have to do is go out, work hard at your job, make money, spend less than you make, and then put the extra savings into Bitcoin, and then allow Bitcoin to benefit from what we know is going to happen, which is they are never going to stop printing money. And I think that simplicity is actually very attractive to some cohort of investors. And now you see investors saying, wait a second here, this quote-unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin.
That's the beauty of it. No hedge funds, no financial engineering. Just earn, save, and hold. It's the purest form of money preservation we've seen in decades.
And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
Calling Bitcoin the new hurdle rate is actually wild but accurate. If your portfolio doesn't outperform BTC, you're technically losing value. That's a complete shift in how investors think about returns.
That's true. Now, the vast majority of Bitcoin that an individual saver is buying is being sold by somebody who already owned it, right? I mean, there's a massive industry that's essentially just kind of middleman, frictional. It's mostly about trading. It's not about anything else. It's not about, like, you know, opening up a savings account where the bank creates the asset.
Well, there's always going to be trading volume in any asset, right? People are obviously going to constantly be trading an asset back and forth. But what you see is more and more Bitcoin is being taken into what we call illiquid supply. So over time, that percentage continues to increase where every Bitcoin that I buy, no one's ever touching it again until I die. Right? And I think there's a lot of Bitcoiners who believe the exact same thing. And so what you're starting to see is that illiquid supply numbers creeping up. And so as more capital comes in, the only thing that can happen is if you have a finite supply asset, more people want that asset, but the people who hold it aren't willing to sell it, the price has to go up to clear the market. And that's why Bitcoin continues to go up over time.
This is a huge point. When more Bitcoin gets locked away by holders, supply shrinks. Add fresh demand, and you've got a classic supply squeeze setup. That's exactly what fuels parabolic runs.
Gold has done better than Bitcoin this year. Do you think in the crypto community they see gold as an ally or is it a competitor?
Yeah, you know, it's funny that on one hand, Bitcoin and crypto folks, they're brothers in arms, right, in the fight against currency debasement. On the other hand, I think that the gold bugs are having a field day because they're outperforming Bitcoin. I think gold's up 50% this year. Bitcoin's up about 33%.
Short term, gold's ahead, sure. But zoom out, and Bitcoin has smoked gold for over a decade. Volatile, yes, but it's still the fastest horse in the race.
What I will say is that the average return since 2015 of Bitcoin in Q4 is 60%. So the gold bugs, you know, you're not at the finish line for the year yet. Let's see what happens. But if you go back just 5 years, right, gold is up about 100%. And then during that time, Bitcoin's up 1,000%. And so I think that they both benefit from the same thing. It's just that you have a smaller market cap asset that's got a lot more volatility in Bitcoin. And therefore, it's kind of gold with wings is the way I like to think.
That line's perfect, gold with wings. You get the same hedge against inflation, but with scalability, portability, and way more upside.
What's the difference between those investor pools, or do they overlap?
I think that you generally are going to have an older audience that's got gold. You're also going to have the central banks today, institutions. But very quickly, you're starting to see more and more people that own Bitcoin. They're getting older. Right? It's been around for 15, 16 years now. But also, I think that people aspire to have the central banks eventually hold Bitcoin. The question is just, when do they do that? And what are the geopolitical things that start to transpire if all of a sudden you're saying, we're going to go put Bitcoin in our actual treasury reserve?
This is where things get really interesting. Imagine the day central banks actually list Bitcoin as part of their reserves. That's when adoption goes from retail and institutions to nation states. Game over. Man, between Tom Lee's bullish outlook and Pomp's breakdown of Bitcoin's simplicity, one thing's clear: we're still early in this cycle. Traditional investors are just waking up to what's happening in crypto. Whether it's Bitcoin becoming the new savings standard, or platforms like Ethereum and Solana evolving into the next-gen tech giants, the shift is already happening. If you made it this far, drop a comment. Whose take do you agree with more? Tom Lee's optimism or Pomp's simplicity? And don't forget, I share exclusive market updates and behind-the-scenes thoughts in our Telegram group, links in the description. Smash that like, subscribe, and I'll catch you in the next reaction. Stay early, stay informed.